JohnCBogle, Enough, True Measures of Money, Business, and Life. Welcome to the summary of Enough, True Measures of Money, Business, and Life by JohnCBogle, a book that delves deep into the idea of enough and the need to balance personal wealth with value creation. Dive into the author's analysis of how the American financial system, including the mutual fund industry, has become a value destructor rather than a value creator. Explore Bogle's compelling argument for the importance of professional ethics, moral values, and character over the relentless pursuit of wealth. The book also highlights the crucial role of long-term investment strategies and the need to return to 18th century values, heralding the importance of virtues beyond monetary gains.
The importance of having enough. The story of how Joseph Heller and Kurt Vonnegut highlighted the lack of understanding of enough in the financial system, and how JohnCBogle's approach challenged this. Bogle's focus on character and delivering real value for investors through Vanguard has made a significant impact, while accumulating personal wealth was never his goal. The dangers of financial speculation. The American financial system favors speculation over sound economic performance, leading to unreliable and unpredictable returns for investors. Speculators only win when others lose, making it a zero-sum game. While some speculation benefits the market, excessive speculation puts the entire financial system at risk. Companies focus on financial transactions instead of improving their business operations, with acquisitions being preferred over sound expansion. The financial industry takes an increasingly large cut of returns, making it a value destroyer rather than a value creator. Ultimately, the real return on investment depends on economic performance, not speculative conditions. Disconnect between cost and value. This book sheds light on the complexities of financial instruments, such as collateralized debt obligations and derivatives, that have wrecked the financial system. The book highlights Citigroup's selling of structured investment vehicles that had a liquidity put, which resulted in huge losses. The former Treasury Secretary, Robert Rubin, admitted his ignorance about liquidity puts, and it became evident that bankers had overlooked the fundamentals of their business. The book warns investors of various innovations such as exchange-traded funds, fundamental indexing funds, absolute return funds, commodity funds, managed payout funds, and international and emerging markets funds. The book mentions that these so-called innovative investments tend to be speculative, risky, and less successful than U.S. equity funds. Hence, the book argues that investors should focus on the disconnect between cost and value in the financial system when investing. The unreliable statistics of corporate America. The accuracy and reliability of U.S. government statistics and the financial services industry have been called into question. The Bureau of Labor Statistics omits non-working persons from its unemployment numbers, while the Consumer Price Index underestimates the real rise in prices. Additionally, historical returns projected to predict the future understate reality, and CEO compensation disregards performance. The conflict of interest between institutional investors and corporations further exacerbates the issue. The American financial system rewards self-serving practices, and investors are not getting what they pay for. The decline of professionalism. In many fields, the principles of business have overtaken those of professionalism, which focus on client interest and social welfare. The book argues that true professionals create value, rather than solely seeking financial gain. Unfortunately, this mentality is waning, even in medicine where doctors are now seen as mere providers. The book serves as a call to action for professionals to reclaim their values and maintain their commitment to serving their clients and community. Rethinking mutual funds. The mutual fund industry prioritizes sales over stewardship, leading to higher returns for managers but not investors. Costly fund management is the main culprit, and companies offer questionable investments for profit, leaving buyers likely to lose. The solution is for the industry to prioritize fairness, provide long-term management, serve shareholders, and put them in control. Genuine investment benefits the economy more than short-term speculation. Educing shareholders and appointing independent reps to manage funds can facilitate this shift towards mutual fund stewardship. Principles of effective leadership. A great leader must prioritize caring, teamwork, high standards, values, and freedom to flourish. Individual excellence and loyalty only strengthen the foundation. Bogle's Vanguard teaches managers to lead for the long term and persevere in all situations. The value of virtue. The book highlights the essentiality of values such as virtue and character in life. The author emphasizes that success, wealth, and winning should not overshadow these unquantifiable values. The book calls for a return to 18th-century American values, exemplified by Benjamin Franklin and his peers, where character is given greater importance than material gains.
In conclusion, Enough, True Measures of Money, Business, and Life by John C. Bogle is a thought-provoking examination of the financial landscape and a call to prioritize professional ethics, moral values, and character over unrestrained wealth accumulation. It sheds light on the American financial system's shortcomings, which have led to the prioritization of wealth over value creation, and offers alternatives to traditional investment strategies. The book serves as a reminder to question government and financial sector data and emphasizes the significance of long-term investment and a focus on organizational values. Ultimately, Bogle asserts that the true measure of success lies in one's contributions to society rather than wealth, echoing the timeless wisdom of the past.